All right. Matt, the mortgage guy here with an important announcement from Fannie Mae and Freddie Mac. RefiNow and Refi Possible extended their program. More people are going to qualify. More people are going to be able to save. Before I jump into that, if you like straightforward mortgage and real estate content, please consider like, comment, subscribe. As a mortgage broker who deals with hundreds of clients every single year, who talks to thousands of consumers, hundreds of real estate agents, CPAs, financial advisors, and whatnot, I'm taking these conversations I'm having, what I'm hearing on the streets, and I'm passing it on to you to help you make a more educated decision when it comes to real estate and mortgage financing. So without further ado, Fannie Mae and Freddie Mac, you've probably seen in a prior video, earlier this year, came out and said, you know what? We want folks who weren't eligible, who weren't able to qualify for a refinance, to be able to take advantage of historically low rates. So they developed these two programs, RefiNow and Refi Possible, and said, you know what? We're gonna allow people up to a 65% debt to income ratio to qualify. We're gonna allow their credit to not be perfect. And we're still gonna let these people refi because we want those folks who need it the most. And let's be honest, those people do need it the most. You know, them saving a couple $100s a month because rates are historically low is probably more impactful to them than it is for somebody with perfect credit, with big income, for them to save a few $100s a month. So I believe, you know, the goals that they have are correct or whatnot. So Fannie Mae has RefiNow, Freddie Mac has Refi Possible. These programs came out. I've got a past video on that I'll link down below. But one of the big hurdles was that it's got an income qualifier that you can't make more than 80% of the area median income. And this is the big announcement. There's a few changes and I'll get into all of them, but the biggest change is that both of them are now going to allow up to 100% area median income. If you don't know what that is, I'll put a lookup tool down in the description as well. But based on where you are and what county you're in, there'll be an area median income. It might be 66,000, it might be 72,000, it might be 86,000. And before, when you had to multiply that by 80% and then stay under that, only a certain amount of people qualified. Now, both of them are going to allow up to 100%. It's actually going to be effective immediately for Fannie Mae, and I think sometime in December, Freddie Mac is going to update their system to allow 100% area median income. So that is going to expand this program to more people. More people are going to qualify. Both agencies will do that. I think December 4th is the date, if I remember correctly. I had somewhere in my notes, I've got all kinds of notes. I got papers flying around my desk. But look for that. A few other changes that certainly aren't nearly as impactful as that, you know, income qualifier change is that it used to be you would have to have this Fannie Mae or Freddie Mac loan for at least 12 months. There couldn't have been a refinance in the last 12 months. And then there was a 10-year max. That 10-year max has been eliminated. So the only seasoning requirement is that there has to be 12 months since the last refi, right? Another thing that was a qualifier for both of these programs was there was a $5,000 cap on, you know, what you could finance into the loan, closing costs, prepaids, and points. They got away with that. They did away with that. They basically said, you know what? If this is a refinance that makes sense for somebody, we're not going to say, you know, you can't do it because we don't want to build in $5,400 in prepaid escrows and whatnot. Like, that's just part of how refinance works. You bake this stuff in, then you get a refund of your escrow account. You miss a mortgage payment and whatnot. And so anyhow, that's done away with. Another thing is there used to be a minimum payment reduction where you'd have to show at least $50 savings per month. The new verbiage basically just says must be a payment reduction. So honestly, I don't know if I like that one. Like, hopefully you're working with somebody you like and trust who's looking out for your best interest, who's going to make sure this is a refinance that makes sense. If you're baking in $5,500 into the new loan, you know, in prepaids and fees and points, and you're only saving $19 a month, that's probably not a loan you want to do. And by probably, I mean not a loan you want to do. So make sure on that one, it's no longer a hurdle for people to be able to do these loans, but make sure that you're talking to somebody who you like and trust who's going to put you in a loan that makes sense for you. So that's about it for now. As things come out, I'll continue to update. I think that pretty much covers what's changing. I have seen some stuff where people are confusing this update with Home Ready and Home Possible. Different programs from Fannie Mae and Freddie Mac. It's my understanding that those still have to be 80% AMI. If it's gone to 100, great. But I think people are confusing these two specific programs, RefiNow and Refi Possible, 80% AMI to 100% AMI, not Home Ready and Home Possible, right? So I will follow up on that. I'll have videos come out in the future. If you might qualify for one of these two programs, the best bet is to contact a mortgage broker who you like and trust, who's going to give you honest feedback, right? These programs are specifically designed lower income folks, because you can't go over that 100% area median income. And if you didn't qualify because your debt to income ratio might have been 55%, 60%, this is for you, because it allows you to go up to 65% debt to income ratio. There's no other program out there that will allow that. This specific program allows that because they want to help folks. If you can go from $1,486 a month down to $1,350 a month, for a lot of folks, that $130 savings per month or whatever that, I just threw out random numbers is, that's helpful, right? And so reach out to somebody, let them know your scenario. If you fall under these guidelines, you may qualify. If you'd like to reach out to me and my team, we're more than happy to help. Go to greatmortgagebroker.com. I promise you, it takes less than 30 seconds. 6 quick questions. We will contact you within 24 hours. How can we help? How can we serve you? If it's in California, you're probably going to be placed with my team. If it's outside of California, I got teams in different states who are able to help you. They are going to serve you at a high level just like we will. So we look forward to talking to you. Hopefully this was helpful. Thanks for watching. Thanks for the support. And until next time, we gonna see.